Hey everyone, very quick update on Bitcoin and the markets because many of you just wrote me a ton of messages. Simon, I'm worried. What's happening? Is this a structural change or just a bump on the road? Is sentiment changing? What is happening? Is the fundamental still intact? Is our portfolio safe? So let's have a look at a couple of things. One thing that nobody talks about right now, but it's actually worrying, there is a change in sentiment in Bitcoin. So if you're in for the short term, you have to have a look at this. If you're in for the long term, it doesn't matter. So if you're looking at holding Bitcoin 10 years, 15 years, you don't need to watch this video. If you plan to sell during this bull market, 2024 or 2025, then this is relevant to you. Let's go to, I've shared the data that is from BitMEX research directly on my X channel if you want to have a look at the data directly. The one thing that we have to look at is the flows from IBIT and FBTC, because these are the biggest inflows every week. And if you look at January, we had around 200 million a day from IBIT. If you look at February, we had around another 180 million a day. And then March, we went up to 400 million per day. And in some March days, we had 500 million. The highest was 850 million in one day from IBIT, and just an hour ago we got the data from yesterday evening. So the current data, March 19, is that the inflows are much lower. We went from 500 million per day in IBIT to 75 million, that's BlackRock, and we went to 150 million per day from Fidelity, the FBTC ETF, to 40. So 75 and 40 instead of 500 and 200. Well, that is a structural change, I would say. So do we need to worry? If you are looking at a portfolio lower than 10 years in duration, you have to take this seriously. And if you are looking at 10 years plus, don't worry about this short-term stuff. But we have to name it as it is, because I don't see anyone on YouTube calling it by its name. This is a change in sentiment. These are 2 days of negative outflows. Now everybody's bullish because the halving is happening in 30 days. And historically, the bull run starts after the halving. But this cycle is different. We had the first peak before the halving. So we have to actually look at those inflows, and I will be reporting about these inflows more frequently. Now, it was not my plan, but you are quite concerned, so I will do that. Also, please have a look at the fundamentals yourself in between. Do your own research. One way of doing your research is Artemis. It is a free website. What's the terminal exactly? Let me get, it is app.artemis.xyz. And this is where you can look at the real-time data. For example, the two things that I look up are Solana and Bitcoin. The reason why I'm out of Ethereum, well, everybody is in Ethereum, is if you look at the Artemis site, you will see that daily active users, number of developers are 3 times higher. Daily active users are 3 times higher for Solana than ETH. That's why I moved all ETH to Solana. And this fundamental data, that's what matters over the long time. If you remember what Warren Buffett said, in the short term, the markets are a voting machine, but in the long term, they're a weighing machine. So in the short term, you look at sentiment if you're a short-term trader. I'm not. I'm a long-term investor, so I don't care about sentiment. I don't care about price. I look for value. And value is in the fundamentals. Something is fundamentally strong. In the case of altcoins, digital asset, that means that the number of commits is going up. The number of developers, committed developers are going up. The number of daily active users is going up. Daily transactions are going up. DEX trading volume is going up. The fees are going up if it's an altcoin. So you want to look at fundamentals over the next weeks, and I'm happy to share what I see. The last question that I got today and I want to answer is, Simon, why don't you have Louis Vuitton? You have Hermes in your portfolio, but you don't have Louis Vuitton. Real competitive advantage is what I look for when determining value. Real competitive advantage means low cost of acquisition. So Louis Vuitton has 16% cost of acquisition. That means it's not pure luxury positioning. Hermes has 3.6% cost of acquisition. That means it's a pure play in my due diligence. I'm looking for companies that are strongly positioned, they have competitive advantages, moats that are so strong, either by network effects or measured by the low cost of acquisitions. And there Hermes is the clear winner. Louis Vuitton is number 2 because their drinks part, the champagnes, etc., they need ads to be sold, and that's why it's diluting their position. I only go for strong position stocks. Hope that helps. Keep rolling, everyone. See you soon.